And we notice that the euro is rising at a time when the euro stocks is rising. That means there are some kind of inflows into the euro area, which is increasing the demand for euros versus dollars. And finally, we have here the momentum, and there is no sign of divergence, no sign of loss of momentum here on this chart. So basically, we can be relatively sure that Europe will continue to be on the leadership side.
Welcome back, Bruno.
Good morning, Kias.
Now, Bruno, what is the main factor in the US behind the current bull market in equity?
Well, I think we should look at the US technology sector here. What we have in the upper panel is the relative strength of this technology sector versus the S&P 500. And as we see, it has been rising all the way since March and relatively steadily. Also, when we look at the price action, we notice that since mid-April, clearly the prices are moving close to the upper Bollinger Bands. And further down around the momentum indicators, we have the MACD still rising steadily, and the overbought oscillators for the stochastic remains there very overbought. That means a strong bull market. Also, if we take a longer term view and take another perspective, but still representing technology, this is looking at the NASDAQ weekly charts, the NASDAQ 100, which represent the big, large caps of the NASDAQ. We have, since November, a very steady uptrend and a strong uptrend. And we do not have any loss of momentum or any divergence on the momentum indicator. So we still have here a strong bull trend in technology.
Which other US sectors are supporting the bull trend?
The cyclicals have been supporting the bull trend compared to the discretionary, compared to the defensive stocks. We use for this measure a ratio, one sector, discretionary sector versus staples. And this is the black line. And we see it has been rising quite strongly here recently, especially in April. It is just making a small pause right now, but at the top of the range, and it waits basically to break up. So these sectors are indeed helping the S&P. But look at the S&P itself. It's rather flat in the recent 2 weeks, around 2,400. So something is dragging.
So what in this sector is dragging?
Well, the sector which is dragging is basically the energy sector. And we see a big downtrend line here all the way for the US energy sector. We noticed also that the orange line, the relative strength of energy versus S&P, has been coming down, but is now kind of bottoming. And the price action has been rebounding quite nicely from a new low indeed, but toward this descending trend line. So this is the key levels to watch to get a more bullish signals.
So for the S&P 500, what are the targets and what are the risks?
Well, let's look at a two-time horizon. First, the short-term time horizon, right? We are between 2,400 and 2,380, a very small range, and our short-term target is 2,450. And as a risk, we are going to consider this green cloud here and the upper part of this cloud, which usually act as support. So it's around 2,350 levels. Keep that in mind, and we switch to the weekly charts. And we notice that 2,320 to 2,350 is also a strong support area on this weekly chart between the period of March. So for both charts, we have the same risk levels, about 2,350. Of course, for the weekly charts, we have a longer term up target, which is more in the vicinity of 2,600.
Now, 2 weeks ago, you said the Euro stock will keep leading. Is that still the case?
Let's look at the weekly chart. 2 weeks ago, we were just arriving at this trend lines, big descending trend line, which is kind of key at 3660 on the Euro stocks. And we are still there for 2 weeks. That's not very strange behavior. That's kind of normal behavior when we reach an important resistance level. What is important is basically what's happened versus the other markets, and here versus the S&P 500. We notice that the relative strength is making higher highs and higher lows. So this is the sign of a leadership market. So this leadership will continue. We notice also this orange line, which is basically the euro, and we notice that the euro is rising at a time when the euro stocks is rising. That means there are some kind of inflows into the euro area, which is increasing the demand for euros versus dollars. And finally, we have here the momentum, and there is no sign of divergence, no sign of loss of momentum here on this chart. So basically, we can be relatively sure that Europe will continue to be on the leadership side.
And what's the situation over in Japan?
For Japan, let's look at the Nikkei. It's bullish, it's still okay, but probably a little bit less so than for Euro stocks. We see the dotted black line is now rising recently since the last 2 weeks, but had been pausing just before. We noticed that the strong advances of the Nikkei usually came when the orange line, which is the yen, shows some weakness, when this orange line is coming down. So now we're facing basically two resistances. One is right there at the red line, 20,000, and another one is at 21,000. So basically we have two key resistances. They can be met with some pause, and we will have probably to wait a little bit before we break definitively these two lines.
And are the emerging markets, are they bullish?
Emerging market has been leading somehow for a little while. So the answer is yes, they are leading and they will remain so. Let's look at the three markets we used to look at. First, China, which is kind of important for the world economy. We have here the relative strength of China versus the S&P 500. It is moving up recently. It has been doing some pause in April, but it's rising again. And also, it stops declining versus the other emerging markets. So it's basically regaining leadership. The one which is losing leadership is India. And it has been doing a very nice, strong rise since basically November without any problems. Rising relative strength, but since April, pausing somehow. And also versus the other emerging market coming down, so it basically allows the other market to catch up. Which ones? Which is the third market we look at, Brazil in Latin America. We see the black line rising again and the orange line as well. Orange is versus the emerging market. That means they are catching up on India. And here versus the S&P 500, they continue to outperform the S&P 500. And we see also there is no strong loss of momentum, no strong divergences here. And we are above the cloud. So everything is relatively fine. Emerging markets should continue to outperform the S&P 500.
Now, are there any alarm bells or warnings we should keep our eyes on?
We have been looking at all weekly charts so far, and let's look probably at the daily charts to get some short-term alarms. Let's look at the oil market, which is another way to look at the energy sector in the US. Recently, in the last 7-8 trading days, it has been moving up very nicely from 43, which is the bottom of the trading range, 43 to 55. Has retraced 2/3 of that distance, so around 50. We see that here we're coming close to this cloud, red lines or red band if you wish. Here it might be a little bit of a resistance. It might cap the market for a little while, so we would like to go through that to get really bullish signals. If we fail to do so, that could become a warning signal.
Well, thank you very much, Bruno, for joining us today. It's been a pleasure.
You're very welcome, yes.
And thank you for watching at home. Don't forget to subscribe to our channel to catch further episodes with me and Bruno. Goodbye for now.